this is Mike with an Apex Options Fast Track. This is the weekly recap video for Sunday, February 21. We're going to take a look at last week's trades. We'll walk through a variety of different markets, take a look at some of the profitable trades that we had, some of the break-even trades, a couple of losers. We'll just show you the overall performance that we saw last week. A very active week. It was a shortened week because the markets were closed last Monday, but from Tuesday to Friday, there was still plenty of activity for us, and we'll walk through some of those trades right now. So oftentimes people get so focused on the high-flying tech names that it's easy to forget that there's some great ETFs out there. We're going to walk through a number of those here today. The key for us and our success long-term is staying diversified. We're going to show you some individual equities here. We're going to show you some ETFs. We're going to show you some financials, some energy products, some of the tech names. The great thing about trading, if you control your risk properly, if you spread that risk out and diversify, you can see some really consistent growth long term. And that's our entire goal here with the Fast Track program. So let's just go ahead and dive right in and take a look at a handful of these trades. Okay, we're going to start with the Dow ETF. This is the ETF that tracks the Dow Jones Industrial Average. So we had this trade on the long side. I'll go ahead and highlight it here. You can see this long trade. We actually initiated it the week prior, towards the end of the week. It triggered in Thursday afternoon into Friday. We carried it over the long weekend. We came in Tuesday morning. The great part about that move to the upside to start the week on Tuesday, it allowed us to book that profit. We hit full target, booked our profit. A great way to start the week when you can ring the register, book that full profit, start the week with some profits in your account. That's a great position to be in. So we played that long call spread. Just depends on how aggressive you want to be. They're both very bullish trades. We saw some really great returns there. And the great part about this too is we're getting in and out with as little as a couple $100 per contract or per spread. So they're very reasonable trades regardless of your account size. And we can start to invest a couple $100 and see that profit of a couple $100 within a few days. Well, that's what gets me excited about the markets. So we closed out of that full profit. We then wrapped up the week. We got overbought. It was a very strong middle portion of the week. Tuesday, Wednesday, Thursday, very, very strong price action. And it gave us an overbought reading here on %R. As soon as we got to close below our signal line, that did give us a short setup. And that short setup did trigger in. Okay, so now heading into next week, we're going to carry this position. Long puts, long put spread. Just depends on how aggressive you want to be. If you want to be more aggressive, if you think we're going to get a quick pop to the downside, long put, definitely going to be the way to go. We've been trading the March monthly options on many of these positions. We like to go a little bit farther out in time just in case we're not right on direction right away. It gives us a little bit more time to recover. The time decay is not as big of a factor when you start to go out into the monthly options out 20 to 40 days. It's still there. It's not adding up as quickly as it would with a weekly strike. All right, so what we're doing here next week, I don't need to spend all weekend staring at the charts because I already know my first target's down at 162.30. My full target's down at 160.86. My stop is up at 166.80. Okay, so now everything is outlined for me. Don't need to sit there and look at multiple time frames for confirmation. Don't need to sit there and draw trend lines on the chart. Everything is crystal clear. That's a really great position. Just saves a ton of time. So we had one trade on the week last week. Full profit was booked, and then we did initiate the short trade to end the week, which will carry into next week. So a nice profitable week there on the Dow. Let's take a look at some of the other index products as well. QQQ, which is the NASDAQ ETF. Let's zoom in there. So we had one trade last week also. This one did trigger in actually the week prior, and it almost stopped out a couple of different times. We came within a few pennies of stopping out. You can see it right here. Few pennies of stopping out. Because we have that trade calculator in place, we don't need to panic. We don't need to exit the trade early. We can stay patient and wait for the full targets to be reached. Now, fortunately for us, we never hit the stop. Had we hit the stop down here, we definitely would have taken the trade off, booked the loss, and moved on to the next trade. But because we held that area of support, we bounced back higher. We did hit full target here middle of last week. So just a great trade there. Long call spread. Again, we're keeping things very simple because we want to get in and out quickly every day. Looking at my week last week personally, I had very little time to look at the markets. I didn't have a single day last week where I could have looked at the charts for more than 20 minutes. So all these trades have been taken, in and out very, very quickly. Get those trades in place, move on with your day, get some stop and target orders in place or get some price alerts in place and move on. That's really the power of the system. So then to wrap up the week, we had this short setup that briefly printed at 100.56. It never triggered in. So it's still there into next week. If we get any type of selling pressure into next week, we'll trigger into this thing pretty quickly. Okay, and then we'll again look at long puts, long put spread. That's the way that we would look at playing the move to the downside. So my plan of attack for Monday morning already in place. If we get down to that entry point, I'm going to be triggering into a short trade. If we do, I already know where my first target will be, second target, and the stop. So everything's outlined for me in real time. So one trade last week, the winner on the upside. Finally on SPY, you should start to see a trend here. I mean, the index products were very, very strong last week. Let me zoom in here. So we had our long setup that did hit full target. Okay, hit full target on Tuesday. So a great way to start the week. Again, markets were closed on Monday. We came in Tuesday morning. It's just great to be able to ring the register right off the bat. And that was our only trade for the week. We did get overbought. So heading into next week, we are in an overbought condition. The only thing that we need here is a close below our signal line. So far, that signal line is holding as support. You can see that right here, that dashed yellow line. So I've got to wait and see if we can break that thing to the downside. If we do, that'll have us looking to play a quick pop lower. So one trade on the week last week, nice full profit there. So if all you did was trade the index products last week, we're talking about, just if you're trading one contract with a long call or a long call spread, we're talking about hundreds of dollars of profit. So the system is paying for itself in 1 week just trading the index products. There's a lot of powerful profit potential there. Okay, but like I mentioned, we want to be diversified. We don't want to just trade the index products. We want to get a good mix of sectors going as well. We talk about the financials all the time with our students because the financials tend to lead us higher and lower. We've had a really nice session here with Citigroup. Okay, you can see the system with 2 long trades. Really nice move to the upside. Now, this doesn't happen all that often to get 2 trades in the same direction back to back like this. That does not typically happen with the reversal system. It just happened to be one of those special occasions, and it paid off in a big way. There's another few $100s worth of profit right here, just trading a single contract. So unfortunately on this move to the upside, we did not get overbought here on %R. So right now, heading into next week, we're in sit on hands mode. We need to wait for either an overbought or oversold condition before we do anything fresh and new. So we'll be patient, see what happens here early in the week next week. And again, because I'm swing trading, I'm trying to get in and out quickly every day. I'm not going to be concerned about sitting on hands. It just allows me to get in and out quicker, right? We're just going to be patient, wait for the next setup. The energy names have been very, very good to us as well of late. Chevron has been phenomenal. Going back to the first of this year. We've had 8 trades now going back to January 1st on Chevron. We've had 6 full winners and 2 break-even trades. We closed out of this break-even trade to start the week. Unfortunately, we just couldn't get a push to the downside. So we stopped out of that trade at break-even. We did initiate a new short trade late in the week. So we would like to see energy get a little bit more selling pressure heading into early next week. That would be great to see. So we did trigger short. 85.84 was the entry point. My targets are down at 83.34 and 82.54. The stop at 89.84. So everything's outlined for me into next week. My plan is in place. Don't really need to do a ton of homework over the weekend because of that roadmap that the calculator is printing for me. So I'm just going to wait and see some follow through there on Chevron, hopefully. XLE is the energy ETF, so this is just a great way. It's a slower mover, so if you've got a busy schedule, this is a great name to trade to get some exposure into some of the energy products. We also closed out of this full winner on Tuesday of last week to start the week. So you can see Tuesday of last week, just a great way to start the week. We booked a ton of profit on Tuesday. So just a really nice straightforward trade to the upside. We got oversold in the near term. We looked to play the bounce to the upside, and that worked out really well for us. So energy just been very, very profitable. I do want to quickly touch on Halliburton. This is one that we talked about in one of our earlier videos. We did close out of the winner on the short side. This is one that we talked about in one of our earlier videos. So we were fortunate enough to hit that full target on the downside. And then heading into this past week, we did trigger into this long trade. 30.35 was the entry point. We did hit first target. You can see we hit our first series of blue dots. Once we hit that level, we move the stop to break even. Now, ultimately, we'd like to see that full target hit up at 32.27. That's my full target that's in place for next week. But worst case, the stop's been moved to 30.35, that entry. Okay, that's a great position to be in. We've reduced the risk. Now we're basically playing from a position of strength heading into early next week. So one more push to the upside on Halliburton, and we'll be able to book some profits there as well. What about some of the high flyers? Okay, I mean there's some great products to look at, like Netflix. Let's take a look at Netflix because we do have a trade in progress. So this is the only trade that did trigger in last week. It was a short trade. Our entry was at 90.1. We have targets at 87.70 and 84.02. The stop up at 95.30. So we've got the short trade on, long put spread out in the March monthly options. If we can hit that first target, that will allow us to move the stop down. So at a minimum, I'd like to see one more push to the downside. That'd be great for us to be able to reduce that risk. So we will carry this one into next week, see if we can get a lower open over the first couple of days of next week. So that's Netflix. Twitter. Trying to move fast here because I want to get to as many of these symbols as possible so I can show you the flexibility of the system. So now we've looked at some ETFs. We've looked at some financials names, some energy names, some of the tech names. Here's Twitter, a social media name. Okay, you can see that the earlier long trade did not work out. It flat out hit a stop. Okay, so I'm not just going to sit here and show you all the winners. We're going to show you the losers as well. So the long trade, we did get oversold. The problem here, we triggered in long, but we know that markets can stay overbought or oversold for an extended stretch, and that's exactly what happened here. The market just wasn't ready to bounce, and we did stop out of this trade early last week. We followed it up with a new long trade, and that one did work out well for us. So our full target was up at 18.94. You can see on this candle right here, we popped up. The high of that candle was at 18.88. So when you get 6 pennies, 6 cents within that full second target, what we teach our students is you've got to make sure you lock in some type of a profit. You can't just let this thing go and potentially pull all the way back on us and take us out at break even. We've got to at least cover commissions here. So oftentimes our rule is when we get 90 to 95% of the way to the full target, we're going to move that stop up to right around either the first target or just below the signal line. So I'm going to have my stop here heading into next week just underneath the 18 level, 17.95 to be exact. So I give it a little bit of breathing room. That way it can pull back if it needs to, but ultimately I want to give it time to hit back up towards that 18.94 level. Worst case, at this point, I'm out with a profit. So it's a great position to be in, and we're in a position of strength here heading into next week. Hopefully we can ring the register pretty quickly. So Twitter recovering nicely after the losing trade. American Airlines. I personally like to have access to the airlines. I think there's some great movement there long term. We did close out of a full winner here as well. So here's the neat part. No one likes to take a loss, right? If we go back to the earlier long setup right here, you can see the blue dots outlining this trade. We triggered in at that first blue dot and almost immediately flipped right back around and stopped us out. So again, no fun to hit a stop, but look what happened. The system was still oversold here. We're still below minus 90 on %R. We got another close back up above the signal line, and that entry point hit on the long side. So we gave it a second attempt, and this one did hit full target. We closed out of this trade Wednesday of last week. So out of the last 2 trades, we've got a loser and a winner, and we're still up money. That's the key formula here. We want to make sure we have a good winning percentage. Ideally, long term, I want to win at a minimum 66% of the time, 2/3 of the time. And then I also want to make sure my winners are larger than my losers. If we have that, it takes a lot of the pressure off your win rate. I don't need to win 80% of the time to make money. So we're not going to be stubborn. We're going to learn to take losses when they happen, keep the losses small so we can recover very quickly like this. So, loss and a win here over the past couple of weeks, and we're still up money on American Airlines. That's a great position to be in. Now, heading into next week, we are overbought here on %R. All we need is a close below our signal line. If we get that early in the week next week, we will see a new short setup. Okay, so my plan of attack is already in place on American Airlines. I don't need to sit there and stare at the chart all day long. I'm just going to wait for another close below the signal line. When that happens, I'm going to see an alert pop up on my computer to know, hey, it's time to come over, time to check American Airlines. It potentially is time to get into a short trade. So that's what I'm looking at heading into next week there. VXX, this is an ETF that tracks volatility. So no surprise here. I mean, we've seen some big swings back and forth in volatility. With this market on the equity side of things, equities have been all over the map here just over the past month or so. And volatility has also given us some nice swings. Couple of full trades, full winning trades in a row here on VXX. So we first played the move to the upside a couple weeks ago when equity started to get hit. They started to sell off. We did play that move to the upside. Great full winner there. Then this past week, we had this short trade as the market started to bounce. I mean, with the last week or so, we've seen a pretty big bounce in many markets, a nice move to the upside. And as a result, volatility contracted. Volatility moved lower. The equities and volatility, they're typically inverse of each other. Okay, and that's exactly what we had. So volatility sold off. We triggered into a short trade here. Okay, and we came down and we hit full target pretty quickly. I mean, we were into this trade on, let's get the exact date here. We were in this trade on the 12th. We hit full target on the 18th. That's a very typical holding time. We're typically into these trades for anywhere from 24 hours on to 2 weeks. That's what we classify as a swing trade. So really nice profitable move there to the downside. Long puts, long put spread. The great part about options, you can really adjust the risk unlike any other market out there. If you've got a bigger account size, you can trade multiple contracts here. If you've got a small account size, you can trade the VIX for as little as a couple $100, probably even less if you're trading a vertical spread. So there's just a lot of potential here. All of these trades, we're talking about a couple $100 of risk, and on these winners, we're also talking about a couple $100 on the winning trades. So when you start to add this up over a decent sized watch list, it doesn't need to be a watch list of 50 names, but if you're starting to look at 10 to 12 names, you can start to do the math here. We've talked about some break-even trades. We've talked about some losers. We've talked about a number of winners. So in the end, you're making some really nice profit considering that we're coming in for about 20 minutes a day or less. So now heading into next week, we rang the register. That's 2 full winners in a row on VXX, and now we're just going to wait for either an oversold condition or another overbought condition. So we're just going to sit on hands heading into next week and wait for something new to develop. What about TLT? If you pay attention to any type of financial media, you know that the bonds have been in focus, which is to be anticipated because bonds have made a big move to the upside as well. No surprise. With equities moving lower, going back to the beginning of this year, anytime you start to see fear kick up, okay, bonds typically see a big move as well. So let's move over and take a look at this trade on the downside on TLT from last week. Here again, triggered in. 133.30 was the entry point. We triggered into a short, long put spread. Okay, this short triggered in on the 11th. We hit target the very next day, so we're in and out in 24 hours. Okay, that's a really great move. Anytime you start to see that quick pop to the downside, that's great for us because the move is it happens very quickly. That means the time decay doesn't hurt us. The volatility expanded on that move to the downside. That helped us. And we got the directional move in our favor. So that's just a perfect scenario for an options trader. There's a ton of profit in there. Okay, again, couple $100, the potential to return a couple $100 and then some. So just a lot of profit here. All right, so we've taken a look at index products. We've taken a look at some financial names, energy names, some of the high flyers, some of the tech names. We took a look at a social media name, an airline, volatility, the bonds. You can see a trend here. I'm trying to be as diversified as I possibly can. I tell my students this all the time. If I'm in a position where if I'm looking at 20 symbols, for example, my watch list is 20 names. If all 20 of those names are hitting full target at the same time, as crazy as this sounds, that's a problem. That's an issue. That means I'm trading names that are way too correlated. Long term, I want to have a good mix of winners and losses because that means I'm properly diversified. I just showed you today. These are all names that we look at each and every day in our training room. These are names that I trade personally. So I had some losing trades last week. Okay, that's part of trading. But I know that if I'm going to have winners, losses, break evens, the way that our system is built, our winners are larger than our losers. We win more than we lose. That's the key formula to success. So if I have a diversified list, like we talked through, having all these different types of markets, that makes me feel better. Okay, because if we have some winners and some losers, that means that we're not highly correlated. You're not going to see those big swings in the equity curve. If you're trading names that are all highly correlated, yes, you're going to see some big expansion in your equity curve when things are going well. But what happens when all those correlated names start to hit losers at the same time, right? That's when it gets frustrating. That's when you start seeing the drawdown in your account, and that's typically the time when you quit on your system, right? We're trying to avoid that situation. Okay, so if we can have a good mix of products, you're going to be far better off in the long run. So hopefully you found this video beneficial. Really profitable week for us, even though it was a shortened week last week. I'm really excited about what's coming next week. I think the market's going to stay pretty active here. And the great part for the new students that have just joined here recently, a lot of them have already paid for the system and then some. And that makes me very, very happy, because now, they're basically playing with house money going forward with a system that's going to set them up for long-term success. So we don't care if the market's heading higher or lower. There's things that we can do regardless of what's thrown our way. So if you have any questions, feel free to send me an email directly. My email is mike@netpicks.com. I'm going to go ahead and wrap this video up here, and I will be back next week with the next recap.